So, all right. If you can hear me, please write on the screen that you can hear me. Write on the chat that you can hear me. Let me know that you can hear me. You can hear me. Just tap on the screen that you can hear me. All right, let's dive into it. So, as I was saying before, forex trading is just something you just need to focus on. Like, you need to focus on it, understand the process before taking any trade. Before taking any trade, some people take forex like as a scam because while they are trading forex like gambling. Just see that the forex is going up like this chart now. The forex is coming down. You are just buying. You don't know the source. You don't know the reason why it's coming down. You don't know why it's going up. So a lot of people make that mistake. You don't understand why it's going down. You don't understand why it's going up. Some maybe like few minutes now, maybe like 20 minutes or 10 minutes more now, you will see that this market will start shooting up because you are just thinking that the market will just continue going down. So it's not like that. Market is not like that. So I always advise people to understand the process first before diving into trading. Before taking any trade, you need to understand it first. So I don't tell people to download MetaTrader 5 or MetaTrader 4 to start trading without understanding what they are doing in the market, without knowing what the market is really doing. So without wasting most of you guys' time, I'm going to teach you how you are going to trade forex market, how you are going to understand it, and what's the process you are going to face, you are going to be following in the forex market. First, you need to understand the trend of the market. If it's going in an uptrend, maybe like the market's moving just like this. It's moving in an uptrend or a downtrend. Maybe this market is moving like this, giving you a higher high, a, a higher low, a higher high, higher low, a higher high, a higher low, a higher high. When the market is going down, it's going to be giving you a lower high, a lower low, a lower high, a lower low, lower high, just like that. That's how the market moves. But you are not going to see it just like this because the market is going to give you different things. You are going to see break of structure and you are going to see market giving you different things. Like you are not going to see it straight like this because if the market is just moving straight like this, nobody is going to move, make lost money or nobody is going to lose money because you are going to be seeing the market that in that the same direction that is going there, and the market is not going to move like that. Just like I judged like this, it's not going to move like that. It's going to give you just like this step. Let me go to maybe 10 minutes, 10 minutes. Let me go to 10 minutes. You are going to see the market like this. This is an uptrend now. This an uptrend. Let's see this. Yeah, this is an uptrend now, and the market starts going back down. But you are not going to see the market like this always, because it's going to give you another dimension, another thing. You are going to be seeing another thing in the market, and a lot of people don't understand candlestick. Candlestick. Maybe you are in 4 hour time frame. Maybe you are in 4 hour time frame now. Like one candlestick, which is this green, which is this green candle or this red candle, this green candle right here, this green candle right here, this is 4 hours. This is 4 hours. You are in maybe 24 hours. This one candle formed in 24 hours. This one that you are seeing, even though it's small or big, it formed in 24 hours. It formed in 24 hours. Maybe let's just take this like this and go to maybe 8 hours. one candle form in 8 hours. You are going to see, maybe you can see this right now, 1, 2, 3. That's going to give you maybe 24 hours. But now you are going to be seeing the market every candlestick right here, because you are in 4 hours. You are going to be seeing one candle opening from here, pushing up and ending here in 8 hours. In 8 hours, that's just how the market move. That's how you are going to be understanding the market. And when you go to maybe 4 hours time frame, you are going to see different things. And this candlestick right here, it formed in 4 hours. 4 hours. That's why I always tell people to be patient enough. Like, be patient before you take any trade, before you take any entry. Be patient. When you go to maybe 2 hours, one candlestick form in 2 hours. When you go to maybe 1 hour, one candlestick is formed in 1 hour. So if you want to analyze the market, you want to understand the movement of the market, what's the market doing, what is your take in the market, what's what are you going to take in the market, maybe buy or sell. You can see that this market is moving in an uptrend, right now, showing you a lower high, higher high, lower high, higher high. So that's how the market is moving. And if you come to maybe you are in 1 hour time frame right now, you are going to see this one candlestick in 1 hour. You are going to see it maybe like this one just open. You are going to see this one candlestick open, and it's going to be moving up and down, up and down. And in 4 hours, maybe I say in 4 hours, in let's go to maybe like uh 15 minutes. Let's go to 15 minutes. You are going to see this candle right here, giving you a different perspective that you are going to be following in the market. It's going to give you maybe like you are going to uh let's say 2 minutes. 2 minutes. You can see the market right here. In 1 hour, it's showing that the market is going down. It's showing that the market is going down, and it's showing you red candle, which is the market is going down. You can see in 2 minutes right now, the market is still going down, but giving you green to go up. It's showing green that it's going up, it's coming down, it's going up, it's coming down. And you can see where the market starts from. This red candle right here. That's where the 1 hour time frame starts from. So if you don't understand that, you are going to be losing money, because when you open the market, when you just get to the market and you just get, maybe you went to 4 hours time frame, and you believe that the market, you just see red candlestick, and you are just buying. You are just buying because you see red candlestick. And maybe if in 1 hour, in 1 minute time frame, the market is going up. So you are going to be losing money because the market is going up. The market is going up and down in 1 hour, in 1 minute. So you are going to lose money because this let's say 1 minute, you are going to see how the market is moving, what the market is doing, but you have to analyze from a higher time frame to see where the market is going. And for you to analyze from a higher time frame, you need to understand the liquidity, you need to understand breakout block, you need to understand fair value gap, where the market go to before coming down. You need to understand all those places before entering any trade, before going to any trade. So that's how forex market is. Forex market is not hard, but a lot of people make it hard. And you can see some gurus telling you that forex market, if you just pay for those course, you are going to learn forex market. If you are not consistently, maybe like you are consistently waiting for the price to give you what you want, maybe you can see the market is coming down right here. Let's say the market is going up right here, going up. It's going to give you different things, but and you analyze the chart that the market is coming right here before taking the trade. Maybe you want to enter from here, and the market is just currently here. The market is currently here. The moment you take this trade, the moment you take this trade from here, you are going to be losing money because the market is coming here. So it's not going to go up because you press buy or because you press sell. When you press sell, you know that yes, this market is coming down here and you are going to make money before taking another entry into the upside. So you need to understand all those steps before entering any trade. So without wishing most of you guys time, uh Forex trading is just something you can learn, maybe learn like maybe step by step. Let's say step by step. If you don't understand it that way, you are going to lost a lot of money in Forex market. You can see right here, I teach about Forex markets. The video is already in my YouTube video. You can watch that for you to understand the market, for you to know what the market is doing and how you can be profitable in the Forex market. Let's just say we want to analyze this chart right now. Before we analyze the chart, before we analyze the chart, we have to go maybe like 4 hour time frame before we analyze the chart, before we know uh to know where the market is going and when to take the market. So you have to go to maybe 8 hours or 4 hours, but I prefer 4 hours most time in the market. So before this volatility 25 starts coming down, right here, I already know that the market is coming down. How did I know that the market is coming down? That's about 1 to 2 months ago. Let's say 1 month ago, I know that the market is going to be coming down, but I didn't take the trade though. But I know that this market is coming down already. As I draw this trend line like this, and I draw another trend line from here, from here, and I was waiting for the market to break this place and retesting this trend line right here, break and retest. When it retests it, it's going to give me maybe a head and shoulder or a head and shoulder or break and retest strategy for me to enter the trade. And I would maybe take my profit right here, putting my stop loss above this previous high, taking my profit from here. That was what I was insulating then. But I think I took this trade. I don't remember. I think I took the trade, but I don't remember. This is how to trade forex market. This is how to trade the forex market. When you go to maybe to 24 hours, you are going to see fair value gap right here, right? This place. I know that you don't know the fair value gap right now. I'm actually teaching you. I know that you don't know fair value gap and all those things right now, but we're going to do a video about that for you to understand how the market works and what you are going to be doing in the forex market. I think my network is bad. I'm just showing you the chart for you to understand maybe how the forex market goes, how you're going to be profitable in forex market. Uh, the time to buy is when you believe that the market is coming down. The time to sell, I mean, it's when you believe that the market is coming down. The time is to buy. It's when you believe that the market is going up. That's buy. This is buy. Let's write it right here. The time to buy. Let's say buy. It's when the market is going up. You believe that the market is going up. That's when you are going to be buying. That's when you are going to be buying the Forex market. When you are going to be buying. But the time to sell, you are going to see everything in MetaTrader 4. You are going to be seeing everything in MetaTrader 5 and 4. Say buy or sell. So the time to sell is when the market is moving down. That's where you are finding entry to enter, to buy, to sell in the first market. When you go to MT5, I think I should add an MT5. Just give me a few minutes to add that I here. Just give me a few minutes to add my laptop is somehow. I analyze this chart then, but we are not going to go through that right now. So this is MT5. I don't think you can see it. If you can see it, please just type on the chart that you can see the screen. Type on the chart that you can see the screen. If you can see it, let me add it. Let's dive into it. So you can see this market right now. This is how you are going to be seeing it on your phone. On your phone, I know that your phone is not that wide like the laptop or something like that, but this is how you are going to be seeing MT5 and MT4 in your phone. This is how you are going to be seeing it. So the time for you to buy is just like this. Time for you to buy is up. When the market is going up. The time for you to sell when you believe that the market is coming down. And take entry from here. I just I think I want to show you something. But I don't think that is here. Oh, let's say I want to save sell. I want to buy here. You can just open an order. I don't think I'm going to an account. It's just like I explained, right? Just like I explained before. We can just go into let's say I want to share my screen from right here. Let's go here. Let me share the screen. Let me go to let me see. Let me use this method. You can see this right here. So I want you to understand this because if you don't understand it, you are going to lose money. Or maybe you don't understand how you are going to enter forex market. You don't understand how you are going to say, how can I buy? How can I sell? Or you can see this right here. This the so you can see it in MTL, maybe trading view. Trading view, you can see long position. That's when you believe that the market is going to buy. That is when you believe that the market is going to sell. This short position is when you believe that the market is coming down. So this green right here is, let's say, is your profit, and this red right here is your stop loss, maybe like the money you are going to lose in the market. Maybe you enter a trade from here. Let's say you enter a trade from here. I like drawing my trend line first. You want to enter a trade from here. Coming. You want to enter a trade from here. You enter a sell position right here for the market to come down, and you press this short and enter from here, and you are targeting maybe 2:1 or something like that, 2:2 or something like that. When the market comes up, like start coming down like this, like this, like this, let's say like this, and the market go up to hit this place, you are going to lose money. Maybe like you are risking $50, or maybe like you are risking $2, or maybe you are risking $4, or maybe you are risking $100 or $1,000 in the market. When the market break this place to the upside, that means your prediction is not right. Your prediction is not right. That means this candlestick will not be shown. Then you are going to see something like this. Let's say you are going to see something like this, because maybe tomorrow you are going to see another candle here. Where is the market going? That's what you should be looking for. Where is the market going next? This is a fair value gap that the market will can come to before pushing up. If you want to push up, you have a fair value gap here. I know that you don't know what fair value gap means, but I will explain that to you personally. I will explain that to you because I want you to understand how to trade forex market. So I'll explain that to you. Fair value gap. The market will come down here before going up, or maybe going down more. So you have to analyze the market before knowing that. But the moment like you take a entry from here and you say that the market is coming down, let's use example like the market get to this let's press buy now. Believe that the market is coming up and your stop loss was here. Your stop loss was here. The market now push down. You are going to lose your money. Maybe like you are going because you predict market wrong. The market is coming down and you said that the market is going up. You are going to lose your $2 or your $100 or your $50. You are going to lose that in the forex market. So that's how forex market works. The moment you don't understand where the market is going, you are going to lose money. The moment you understand what the market is doing, that is when you are going to make money. And you are not going to be right every time. You are not even a professional trader like Happy Forest, David Benson, none of them is right every time. So it's when your win is bigger than your losses. That's when you are maybe have the confidence to trade more. Is when you have the confidence to trade more in the forex market. It's when you have that confidence. I want to be in this. I want to do this because why? You are making money from it. Like let me say, this is you take a entry from here. You are risking your $50, and you are making $300. $300, which is let's say four. You are risking two, let's say two, you are using to make, let me say one, because it's $50. You are using your $50 to make $500. $500. And another time you risk another, maybe like from here right now, you believe that the market is still coming down, and you take another entry from here. You take another entry from here, and your stop loss was right here, and you are risking maybe maybe $50, maybe $50, or you are risking $100 from the let me write this here. You are risking no, you already make $500. You already make $500 in the market, which is this, and you want to make another $500, and you are risking $100. $100 or $50 to make to make $500. Sorry, I'm slow in my writing. So to make $500 in this trade, and you now lose the $100, which we are going to minus from this. You lose $100 from this, and you have left, like, what you have left is, let's say you have $400 or $450 or $450. You are going to call yourself a profitable trader. Don't let this your lose tell you that you are not good at the market. Nobody's perfect in the forex market. You are going to lose sometimes. It's when you are disciplined, understand your risk management. You don't risk more than you don't want to lose. Like you already make $500. You want to risk $500 to make another 1,000 or $2,000 or maybe $100,000 or maybe a $50,000. You are risking the money you have already got before. You want to risk it in the same market. Can you see that the market will hit your stop loss and you will lose this $500? You have to stay consistent. Like, make sure you risk small, maybe like 5% of your money, 2% of your money, 1% of your money. Maybe you are risking $100 to make. Maybe you take another trade now, another trade. Maybe you take another trade right now. You already have maybe $400, which is, or $450. You take another entry from here. You take another entry from here, and you put your stop loss here, and you are targeting this. Maybe you're targeting maybe $400 or 50 or $500, the same $500. You are targeting that $500, and the market just come to this $500, and it hits your take profit. It hits your take profit. You're already making uh you're already making 950 or 900 in the market. But your emotion is going to be deal with you because you already lose. uh Maybe you trade today, you trade $1,150. Your emotion is going to say, why not just make $50 or make $100 to make it 1,000? Don't trade, don't just trade that. That's what is telling you to take that entry is going to blow, like, is going to blow your account. Like, you are going to lose your account. Like, you are going to blow your $50, and you are going to go back to eight, maybe like 850. Let's say 850. You are going to go back to 850 or maybe it's 900. Don't just trade. Don't just trade. That day is okay for you, even though you don't make to $1,000, because we are just risking $50, $50, and you already make $9, $9,000, $900. That's enough for you. That's enough for you. You don't have to take any trade. You don't have to do anything. That's enough. Leave the market. Let the market be. Just let the market be, because you don't have entry anymore. You don't have entry anymore. You just want to stress yourself. You just want to stress yourself. Just leave the market. Just go to anywhere, use your $50 to eat some juice or eat something. That's how forex work. You don't just jump into the market. I saw some people telling me that I'm going to use my $20 to make $1,000 in not less than 15 minutes. They are going to be telling you all those things on YouTube. So I don't want you to have that mentality. Have the mentality of growing small to a bigger level, to a bigger level. Maybe you are risking your maybe like you are risking $4 and you are making $10. Grow from there. Grow from there. You are making for your maybe you are risking $5. $5. Grow from there. Grow from there. From there you can start. moving up, when you have maybe like confluence to start trading the market, you are not going to tell me that your strategy is going to work every time. You are not going to tell me that because it doesn't work every time. The moment it works, that moment, you just take the trade, leave the market, take the trade, leave the market. If you just take two trade a day, wait for the market to play out, that's fine. Maybe one entry in a day, 1 week, that's fine. One entry can give you $1,000. If you can wait, that's swing trade for you. It can give you maybe $1,000, or can give you $1,000 or even more than. That's why I love swing trade. Swing trade can give you more than that. You can see this that I sent this on my, let me share the screen, Telegram. You can see this profile that I hold from. I was actually in maybe a loss, that then I was in loss, like a big loss then. But now I just I just can't believe my eye when I get to the market that the market is now going to where I predict, because I already see fair value gap there. I believe that the market is going there. I already see the fair value gap, and the fair value gap is valid, and it's valid is the fair value gap is going, the market is going there before going up. I already see that, and I take that entry. The market was going, as in the market was almost going to blow my account, like for me to be out of that profile. So I hold the trade, just let it be. And today, I mean, today or maybe yesterday night, I was literally in profit. Now I'm in 20K profit, 22,000 profit, 29,000 profit. So this is how to trade the forex market. You just have to wait for it. Just have to wait for it to play out. If you don't wait for it, you will lose. That's just how forex market work. You are going to lose if you don't wait for it to play out. So that's how it is. And if you have any question, you are going to show, maybe like I'm going to do this video over and over again, maybe step by step, for you guys to understand how to trade forex market. This is just an explanation for you to understand how to take sell and how to take buy. And I'm going to use my phone to do a MetaTrader 4 or maybe a MetaTrader 5 explanation. All right, ask your question. I want to know what you don't know. Ask your question. I can hear you. Have any question, just drop it on the comment section. Let me read and answer you. For waiting for a question. Before that, I want you to always look at the chart. Always. Because you are going to see this pattern again. This pattern right here. Maybe like this and like this. You are going to see the pattern again. It's going to show itself over and over again. So if you can just master this strategy, uh, this is something that you just need to understand. If you can master this strategy, like you see this thing right here, maybe like I don't know what is called. I believe that this pattern is already there. When you see this pattern like this, if you can make it your strategy, it will be your strategy, and you are going to make a whole lot of money. I don't know why a lot of people is making forex complicated. I don't know why the forex market, why people is making it complicated. And I always love fair value gap to trade. You can see this fair value gap right here. The market comes to this fair value gap and start pushing up. I always love fair value gap to trade with. Fair value gap. I only lost fair value gap to trade with. I've just put my entry here, put my stop loss below. That's that's a good trade. That's a good trade. How do I know the time when the market is? Oh, sometimes the market. That's why I love swing trade. Sometimes you can just see the market is uh you can see something like this. Market is moving down or then or consolidating, then up, then up. And you already predict that the market is coming down. You already predict that the market is coming down. Let's put it that way. You already predict that the market is coming down. You are going to wait for the market because one candlestick is here, right here, right now. If you want to trade this market, maybe like you want to trade this market, you have to wait for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. And all this 15 trade, let me say 20, 25 hours, 24 hours. You're going to wait for 24 hours. So I don't I don't advise people to trade from here. You can analyze the chart from here and you see that the market is going up. You can just go to maybe smaller time frame to take your entry. You can go to a smaller time frame like 5 minutes or 15 minutes, 10 minutes, 2 minutes, 1 minute to take. I don't like 1 minute to take entries. Don't prefer 1 minute to take entries. I think I can just delete all this. The moment you see that the market in, let me say in 1 minute, the market is going down, or maybe it's going to buy or sell. The moment you see that, the moment you see that this market is already coming down, I want to buy, I want to sell, I want to do that. You already see that this market is already coming down, or I want to buy, just let the market come. Just go to maybe like let's put. I'm not going to take the trade from here because why? I'm going to wait for confirmation from maybe 15 minutes to take entry because that in 15 minutes you are going to see one candlestick. The best time to take entry is 15 minutes, 5 minutes. For me, that's where I take my entry from. But the place that I used to analyze the chart, maybe like to say the market is going up or down, to see if the market is going on uptrend or downtrend, is 1 hour, 4 hours. Maybe I can check a day, which is 24 hours. Can check a day to see what the market is doing. But for me, analyze the market from maybe a day, 4 hours, 1 hour, take my entry for 15 minutes or 5 minutes. I take my entry for 5 minutes or 15 minutes because that is where I'm going to see confirmation from. We can see a break of structure right here. Market move back up to come to this other block, which with the market come to other this other block, and the market start pushing down. This is when I should take my trade. This is when I should take my trade. I already analyzed the chart from a higher time frame, and I'm waiting for a lower time frame to confirmation. Lower time frame, if the lower time frame is bullish, and the higher time frame is telling me bearish, which is if the market is coming down, that's mean the market is bearish. If the market is moving up, that means the market is bullish. So if the market is telling me bullish on a lower time, on a higher time frame, I'm not going to take buy sell, which is bearish. I'm not going to take sell. I'm going to wait for a confirmation. You can see a lot of confirmation is already here. If you go to 1 hour right now, you can see that the market is telling you that the market is coming down already. The market is coming down. It's giving you consolidation a pattern right here. Market is consolidating. Market is already consolidating right here. Let's say this in this range right here, the market is going up, then up, then up, then. So I already see that this market is bullish. It's coming bullish right here. So I will just go to maybe 15 minutes time frame to find an entry, to find an in 5 minutes or maybe 15 minutes to find an entry. You can see a break of structure. With this break of structure, you have to find the fair value gap from here or maybe other block from here that the market is consolidating in. You can see the market can be consolidating in lower time frame. It can also be consolidating in higher time frame. You can see the consolidation in higher time frame. You can see it's so wide. But in lower time frame, you can see this consolidation right here. It's going to give you another consolidation. You are going to see another consolidation right here. So it's just everything work like hand in hand, like the way you work from a higher time frame, so you work from a lower time frame. So the moment you understand the lower time frame and the higher time frame, so nothing is going to stop you not to make money in forex market. The moment you understand the higher time frame movement, you already see that the higher time frame mostly it take liquidity a lot. That liquidity, they love taking liquidity a lot because that's where the big bank are working, that the big bank are making money from. That's where the big banks are making money from. So they are they are the people that's pushing the market, which is the big bank. They are higher institutions. Those are the people that are pushing the market. So they are trading from the higher time frame. What you just need to do is for you to just take entry from a lower time frame. Take the entry and leave the market. Take the entry, take your money and leave the market. So the moment you understand maybe like breakout block, other block, because I'm not going to be teaching that in this market, this thing right now, because it's going to take too long. The moment you understand that, you can see this thing right here. You can see this consolidation. You can see a retest on that consolidation. You can see that the market didn't break this place. And if you use a pattern to enter this trade, you are going to go maybe like 1 minute. It's going to give you double top or double top bottom or triple top or triple bottom. See, it's going to give you a pattern for you to enter the forex market, for you to enter the trade, for you to take the entry. If you want to use the 1 hour time frame to 1 minute minute time frame to take entry, it's going to give you maybe like a little money, but not that little because that's the people that's there. You want to take entry from here to here. This this uh this entry right here, if we go to 4 hours, let's say 1 hour. Let's say 1 hour. Before the market gets here is maybe 3 hours. 3 hours in 1 minute time frame. In 1 minute time frame, you can see the entry from here. No, it's not 3 hours because the market moved back up and come down from going to this place. It's going to be 1, 2, 3, 4, 5 hours. You are going to wait for 5 hours before hitting your stop, your take profit. 5 hours before hitting your take profit. Let's say you want to take in from a 15 minutes time frame, going to also be long, just maybe 15 minutes time frame. But you are taking entry from here, take entry from here, and you are targeting this low right here because the market is ranging on the higher time frame. It's ranging maybe like from here. You want to take entry from here. So the market is ranging. Anytime market get to this support right here, you always come to resistance. Because I'm going to teach this support and resistance because that's what you are going to be using in forex market, mostly in forex market, support and resistance. The market always come to that level. This is first touch, second touch, fourth touch. When the market come to this level, that's why I always draw trend line. This is the meaning of that trend line that I always draw. If you don't draw it, you are not going to know where the market touched in maybe like 5 days ago or 6 days ago. It's going to come back to this place. You can see that the market touched this place, it moved up. Anytime the market touched this place, it moved up. Come back to the place. You can see that the market didn't touch it. Let's just move up. The market didn't touch it, but it have to touch this trend line. This let's say support. This support right here before coming back to resistance. Before coming back to resistance. As it touches the resistance, you are going to take entry from here. You are going to take entry from here, maybe targeting this low right here. You are not going to be targeting the higher high. No, I will not tell you to do that because you can see this support right here. The market respects it here again. You can see the market respects it from here again. The market just come to this place to take out this people stop loss. People that take stop loss enter entry from here, you take their stop loss before pushing down. So the market push down. So you are going to take from here. I'm going to take from there. You just wait for the market to play out. That's just how Forex work. If you don't understand this, you are going to be losing the Forex market. If you don't understand support and resistance, you are going to lose the Forex market. Understand liquidity, order block, fair value gap. If you can master all these things that I'm just mentioning, you are not going to be losing in Forex market. Order block, fair value gap, mitigation block, um, a lot support and resistance. You are going to master them before entering any trade. When you see this, you already see this already. This is a head and shoulder pattern. You can just enter the trade from here. When the market break here, you enter this trade from here. Enter the trade from here, targeting this low. Sorry, break and retest. Putting your stop loss maybe just like that, targeting this low right here. The market will actually come here and hit to take profits, and that's it. That's how Forex works. That's how if you understand support and resistance, you are not going to be lost in the Forex market. You understand support, resistance, order block, fair value gap, uh, liquidity, and all that. You are not going to lose in Forex market. That's just it. If you don't understand anything, just ask me any question, and I'll answer you. What is the best time to take any entry? That's what I just explained. That's what I just explained. Do you have any question? Any other questions? This is just Forex market for you. For you. This is, let's say how many pips here down to this place is actually 47 pips. 47 pips, something like that. How many minutes? Yeah, 47 pips. 47 pips going to give you a lot of money if you use a lot of big lot size. You're going to give you a lot of money. You can make 1,000 from just from here to here. It's going to give you maybe like 2 hours or 3 hours. You're going to make $1,000 or maybe $10,000. Depend on the lot size you use. Depend on the lot size you use. You're going to make money from it. That's just it. All right. Let me just clean the chart for you to understand the support and resistance. Let's go to maybe 1 hour time frame. In here, let's see, yeah, let's just start from here. You can see this place. I don't know how to fast forward it back, but you can see this place right here. Maybe this place, let's say this place have not opened, like this place have not been traded with, like the candlestick have not been here, just like as this place is empty. This place touch, like the market touched this place and moved down. Then that, which is sell. The market get to this place and sell down. So you're going to see that market come back to this place. This support, resistance, I mean, sorry. The market move back down. The market gets to hit again. The market is going to do the same thing. Or if it didn't do the same thing, it's going to come, support became resistance. That's what we call support became resistance. Market will come back to this place, retest it. and start moving up. That's just how resistance is. That's just how resistance is. That's resistance turn to support, support turn to resistance. I'm going to do this video again for you to understand it. I'm going to send it to you maybe on my YouTube channel. After posting on my YouTube channel, I'll send it to you for you to understand. The market touch it one, two, maybe one, two, or one, two, three. The market will come back to it again, touch it, and start moving down. Or take this liquidity out. Sometimes you will think that the market is coming up. It's for the big boys to just trick you to take your money. You just see that market does something like this, and you would think that this is a retest. You would think this place is a retest. The market will start coming back up, and when you get to this place, we give you a double top, which I will explain in same previous video I will do. We will give you a double top and start moving down. Then it just take the liquidity out here, like people stop loss. People people already take trade from here. Let's say people take trade from here, and put their stop loss right here. Put their stop loss right here, and they take entry from here. Their take profit is like from here. Like take profit is here. Just want you to understand this. Their take profit is in this line. The market will get to this place. It didn't touch the take profit. And we start moving to loss. When you get to this place, we hit their stop loss. They will be out of the market, and the market will start pushing down, forming double top and triple top. That is just how Forex is, and the resistance, which is the down one, is just same as this support that became resistance. Support became resistance. Resistance became support. That's just how it looks. Let me use another example for the downside. You can see this. No matter how small it is, it's going to respect it. Even though it's in 1 hour, it's 1 minute, it's going to respect it. So you just have to be careful in the forex market. You also have to be careful for you to make a good decision. Just make it clear. Maybe that this place haven't been open like it. No one is have not been traded with. So you can just see one, two. Market went up, one, two. We enter a trade from here. We enter a trade from here. Sorry, entry from here. Put your stop loss below and your take profit to this level, because you don't know if the market is consolidating, if the market is going to come back. Take out your stop loss. So you just have to do that, and we hit your take profits, and the market will start moving up or down. That's none of your business. You have already take a little money, just leave the market. Maybe two trade is good, three trade is good. You already take, you see this support right here. You already take this trade, targeting this higher high. Just take the profit and leave the market. And you see this position again, maybe another position. Just take the trade, take the profit, leave the market. When you are struggling, like you want to draw maybe a support here, you want to make money, because anytime market gets to this place, it always come down. You are going to be stopped out, because why? You are going to take trade from here, thinking that the market is coming down. Put your stop loss maybe here. You are going to be stopped out. You are going to be stopped out. But you can still break even, like break even. You are not going to be losing money, because you already see that the market is coming down already. You just take your stop loss to this your entry. You are not going to be losing money anymore. Like the market is already maybe like let me explain this, because this will be good for you. I want you to understand a lot of things. And I will end this video at maybe like 5 minutes to I'll end the video. Let's say the market is coming down, it's going up and it's coming down. Uh, you take a buy from here, and your stop loss is here, which is like I explained before. This red color is your stop loss, like your money that you are using to trade the market. This, let me say, this is your money, and you are taking this, and you want to take this profit right here. The moment the market is going up like this, you get to this extent, I will always advise you to draw your stop loss down to this entry. So you are not losing any money anymore, which is you are not seeing that red, big red anymore. So you are not losing any money anymore. You can even take another profit. Let's say you want to take you already see maybe like 20 pips. You want to take like 3 pips or 4 pips out of the market. This will not be your, how can I explain it? Like this is your entry. Like this red place that start from is your entry, and this is now your profit, like your profit that you already made, because your stop loss is, you already drag this place to your your entry, so you don't lose money anymore. And here is your you are making this profit right here. If the market come to this place and maybe you attack, let me say, let me just put this for you to understand. You are using your $50 to make $500. Let's say you are using your $50 to make $500 right here, and you maybe you already break even. Let's put this right here. Taking this. This is your $50 right here. This is the red. Is your $50. You are using it to make $500. Let's put it that way for you to understand. You are using it to make $500. When you drag your stop loss to your entry, that means you are not losing your $5 anymore. Your $5 is $50 is not safe. Your $50 is not safe. But when you drag this entry, because the market is still moving up, coming down, moving up, coming down, and it haven't gotten to your entry yet. So when you drag this your entry point, when you drag this entry, I'm coming maybe like 3 minutes. Yeah. When you drag this entry right here, because the market have not got to this place, you drag the entry to this place, you are going to be making, even though the market is $500 and you already take $300 from the market. Let's say you already take $200 from the market, and the market came back to this place and hit this place. You already make $200. So you didn't get to this $500 anymore. So you already use your $5, $50 to make $100. But your thought before, because you thought that the market is going there, is to make $50, but you just make $200. That's fine. That's fine. That's what I was explaining right here. Look at it. Your entry, you can just put your entry in here, take the little money and be out of the market, but you are not going to know. You are not, sometimes you are not going to know for sure, because you are going to think that the market is retesting and coming back down. So it can just hit your you can just hit you out, and you no lost any money because you already break even. That's what they call break even. You already break even, so you are not going to lose any money anymore. So without wasting any much time, I will maybe do another video tomorrow and add you up for you to understand more of how to trade and what to do and what not to do. And I will ask you questions for me to I will ask you questions. And we ask you questions for you to for me to know what I'm actually going to teach you then. Because this that I've taught now, I know that you will not understand a lot of things from it, but I'll ask you question and go over it again, over again for you to understand. So I'll see you in the next class tomorrow.